This conference will now be recorded.
Hello, today I'll be talking about part 2 with public benefits, focusing on Medicaid. The last conversation we had was about Social Security. Today I'm just doing Medicaid. Originally I'd thought of doing Medicaid and Medicare. There's just too much information to go and condense into a 30-minute program. And there's a lot of differences between the two programs that I want to make sure I highlight and don't confuse people. So let's talk about Medicaid. Medicaid it's health insurance. It's used to cover the health medical appointments of individuals who are low income, children, pregnant women, elderly, individuals with disabilities, and it's administered by the state and the federal government jointly. So you have the states with a bucket of money that they're paying for programs out of, and then the federal government does a match. It could be 60-40, 60% from the government, 40% from the state. It could be more than that, it could be less than that. It's going to depend on the state. There is a movement to have states use block grants. I believe some states may already be using those. What a Medicaid block grant is, it's a set amount of money that the federal government gives the state and says, here you go, you're not getting any more from us for this year. So let's say you're in where I am in Maryland, and we get $100 million from the federal government. And we use that $100 million, we use it all by July 30, by the end of July. That means the programs that we are funding will have to come out of Maryland's budget for August, September, October, November, and December. Well, if Maryland didn't budget enough money, that means some of those programs may go unfunded, or they may reduce the amount of people who receive these services. So that's the difference between when federal and state just combine and they fund it every year. And that's the challenge with block grants, is if there's a set amount of money, at some point the state may have to decide how much of the program they're going to continue to fund. So there are eligibility requirements. It's very difficult to qualify for Medicaid. Every state is going to be different. So I couldn't just put up here and say, okay, the income you need is X, say $13,000 a year, because it depends. It depends if you're a child. It depends if you're a pregnant woman. It depends if you're in a state that allows you to buy into Medicaid. So you could be, they have programs called Working Disabled, where you can make up to $75,000 a year and still use Medicaid as your health insurance. Generally speaking, the assets have to be less than $2,000. However, again, there are some states that will have different rules, and they've made it more stringent. So instead of having assets of $2,000, you can only have assets of $1,600 or $1,500. It'll depend on the state. The one that comes to mind is Connecticut. There are other states out there like that. So if you're looking to see how much money you can earn and still qualify for Medicaid, and how much you have to have in assets to qualify for Medicaid, it's really going to be dependent on your state, and you need to be looking at your state's website. ABLE accounts don't count for assets. You can have up to whatever the state maximum is for your ABLE account. The $100,000 limit on ABLE accounts only applies to SSI. It does not apply to ABLE account to Medicaid. So if your state program says the ABLE 529 account can have a maximum of $350,000 in it, that means you can have $300,000 in it and still receive Medicaid, even though you're not receiving SSI. The Special Needs Trust is another tool that does not count for asset limits. So you can have $2 million in a Special Needs Trust and still receive Medicaid. If you have an ABLE account and a first-party Special Needs Trust, the states can come back and it's called clawback, payback. There's a bunch of different names for it. Basically, they are going back and saying, we paid for X amount of money for your health insurance while you were alive. When you die, we have the right to get first dibs on the money remaining in the first party trust in the ABLE account to pay back the health insurance premiums and other costs that we paid for while you were alive. So, let's use my son for an example. He receives speech therapy. He receives several other therapies, doctor appointments, has surgeries from now until he's 80 when he dies. So that's 60 years of services. Let's say those services run up to, $1 million for simple math. If he had $2 million left in his first party trust, then the state would take $1 million of that out of the trust to pay the state back, and the remaining $1 million would go to whoever we identified it to go to. On the other hand, if he only had $100,000 in the ABLE account / special needs first party special needs trust, then the state would get that $100,000, and the remaining $900,000 would be forgiven or just forgotten about. It's important to note some states, like Maryland, have made provisions where the ABLE account does not have a Medicaid payback statute. It is dictated by the state can control it. So just look into that. Again, I want to stress this doesn't happen until the individual with the disability dies. So it's not as if Medicaid is asking to be paid back while the individual's alive. It's after the individual dies, and if you don't pay for it, if you don't have enough money in the trust, they don't come after the family. So here, what's covered? A lot. Medicaid covers a lot of different things. I'm not going to read these. I'm going to leave it up for a second. So if you want to do a screenshot, you can do a screenshot and try to print it off, turn it into a PDF or what have you. I have these saved as PDFs. I'm happy to send it to you. My email is on the last slide. This is generally a good idea of what you can expect for it to pay for. What's important to note with this is it is the payer of last resort, meaning if you have health insurance, any other type of health insurance, Medicaid will pay last. So again, using my son as an example, he's covered by my health insurance. So my health insurance will pay for the healthcare costs first, and then Medicaid will pay anything that's left over. There are some optional things covered. This is going to vary state by state. I will tell you, most of the states I've looked into don't cover dental and vision. The other thing I want to stress is even though it says it's covered in your state, it may be very difficult to find providers who will accept Medicaid because Medicaid pays so little to providers. So even though it's paid for by the state, you may have a difficult time finding a provider in your area who will accept those payments. You may have to do private pay and just know that it's coming out of your pocket and then claim that as a medical expense on your taxes or something. These are all going to vary state by state. I can't tell you off the top of my head which ones vary. This is something that when we're working with our clients, if the clients are curious, we will be happy to give them an overview, but it's also something you're more than capable of finding on your own when you look into your state. So that was the short, sweet overview of Medicaid. Medicare is going to be much more involved because there's 5 parts to Medicaid. Medicare, Part A, B, C, D, and then the Medicare Advantage plans. The other thing I want to say about Medicaid is you may be dual eligible. You may have a child who's dual eligible for Medicaid and Medicare. And if that is the case, very often what will happen is Medicaid will pay any Medicare Part B premiums that the individual has. You can qualify for Medicaid without receiving SSI. In some states, it's automatic that if you qualify for SSI, you will automatically start receiving Medicaid. That's not in all 50 states, so make sure you know what your state, whether or not your state requires you to file for Medicaid. Every state who has a Department of Developmental Disability Administration or some similar program, it might be called something different, but it serves individuals with developmental disabilities and or intellectual disabilities. Their waivers are funded by Medicaid. And the waiver, all that means is it's a waiver to remove the individual or keep the individual out of an institutional setting. That's what a Medicaid waiver is. If you have questions, feel free to email me. My email is at eric@planningacrossthespectrum.com. As always, I hope this was helpful, and I look forward to hearing from you.